Hi, I'm Marv Eisen of Timeless Dollar Trading Academy, and in this video, I'm going to talk about what you need to develop good trading skills. And these are essential perceptions for day traders. One of the perceptions and skills, and it's really not a skill, you need is to recognize the day's trend. Now, not every day does the market put in a trend, but on days where the trend is established, you can recognize this trend and trade in the direction of the trend and not against it. This will give you much better odds of trading successfully. The intraday high or low price. Intraday prices, the high or low, is generally put in the first half hour to an hour of the trading day. And recognizing the lowest level or the highest level that the market has attained will give you some insights into where the market will go in the immediate future. Stop runs. Stop runs happen every day, throughout the day. This one is a very obvious example of a stop run. When you see a candlestick pattern like this, if you're trading in the direction of the green candle, get out immediately or reverse your position, because almost 90% of the time, the market will continue in the direction of the second candle. Intraday market news. Now, intraday market news is news that is announced during the trading day. And most of the time, news that's announced during the trading day doesn't have any impact on market prices. But on days where, for example, the FOMC is announced at 2 p.m. on Wednesdays, which happens 8 times a year, you see a reaction like this. The market is stable up until just before the announcement. When the announcement is made, there's a high degree of volatility, and the market generally takes off in one direction or another after the volatility. And if you trade in the direction of a right guess, then you could make a lot of money very quickly. But if you guess wrong, you can lose a lot of money also very quickly. It's best to hold off and not trade, especially on FOMC announcement days or during the time the FOMC is announced. Most of the time you can check the intraday news and announcements on websites like MarketWatch. Prior close. Knowing the prior close is important because generally the market will gyrate to the level where the prices closed the previous day, and where the market opens significantly above or below the previous day's close, that's called a gap. And very typically, very often, the gap gets filled, or rather the prices relegate back to the level of the previous day's close. And you can use this information to make very profitable trades. Support and resistance levels are also important perceptions that day traders need to be aware of. Knowing where the support and resistance levels are established, and this doesn't happen every day, as you see in this example, but when you recognize where support and resistance is established on days where this happens, you can trade off these levels and have a very successful, profitable day. The trading zone. Now, the trading zone is a calculation of support and resistance made by George Taylor 75 years ago. And there's a book that I recommend to everyone called Taylor's Book Method, where you can calculate the trading zone. Difficult calculation to make. There are many calculations that go into it. All professional traders know how to calculate the trading zone and never trade without it. Very often the prices will trade within the trading zone, and used in conjunction with the intraday high or low, the trading zone can yield very profitable results. This is something that I offer as a subscription service because of its value of yielding very, very good profits. Volatility. If you're trading looking for a point or two and the market is volatile to the extent of 10 points per minute, as you see on this chart, then more often than not, you're going to be stopped out. So either recognize that volatility is greater than the market range the price range that you're shooting for, or wait till the volatility dies down. Here's a close-up of what I mean. The volatility of 10 points within a minute, if you're looking for 1 or 2 points, or if you're scalping for 1 or 2 points, typically you might get it, but more often than not, you're going to be stopped out. So these are some of the essentials to developing good trading skills. And these are perceptions. These perceptions are developed through experience. But you need to know what to look for. And this is something of things that I teach at Timeless Dollar Trading Academy. Thanks for watching my video today. Trade safely, use a lot of patience, and I'll see you in my next video. This is Marv Eisen for Timeless Dollar.